American Airlines is hitting major turbulence, and the fallout is hitting the workforce hard. The stock dropped about 5% recently, and for good reason. The airline just announced it is slashing jobs, primarily targeting hundreds of white collar managers and support staff. This is happening mostly at their huge headquarters in Fort Worth, Texas. They say they are making a small reduction to simply right size the company and become more efficient. What does that mean in reality? It means they're cutting what executives see as COVID era bloat. Reports suggest American Airlines is looking to chop between 4% and 5% of its total employee count. That translates to potentially 5,000 to 6,600 people losing their jobs. This comes years after the pandemic boom, showing the recovery hasn't been smooth for everyone. The most controversial part of this move is that some jobs, especially in the tech and back office departments, are reportedly being shipped overseas to a new center in India to save on payroll costs. For many longtime U.S. employees, this feels like a total betrayal of loyalty. So, why are they cutting staff? The money situation is rough. American Airlines is the world's largest airline in terms of capacity and aircraft, and they are moving toward a so-called premium model to compete directly with Delta and United. But while they brought in massive revenue, about $13.7 billion in the last quarter alone, they still posted a net loss of $114 million. That means they made a lot of sales, but still lost nine figures of cash. This resulted in a loss of 17 cents per share. The financial pressure is real. The company is dealing with about $31.3 billion in long-term debt, and they are showing major financial warning signs. Their cash position is weak, indicating potential liquidity challenges, while their operational efficiency, shown by their gross margin, is around 30%. Consistent losses remain a massive headache. But it's not just internal problems. The entire U.S. air travel system is facing chaos. A major driver of the stock volatility and operational strain is the ongoing government shutdown. When the government shuts down, we see severe staffing shortages, especially for air traffic controllers. This has caused serious flight delays and cancellations across major U.S. airports, like Newark and Reagan National in Washington, D.C. In recent days, we've seen over 10,000 delays, with nearly 3,000 flights delayed in a single day. The U.S. Transportation Secretary even warned that if the shutdown continues, we could see mass chaos, and authorities may have to close certain parts of the national airspace. American, along with rivals United and Delta, has been severely impacted by this outside pressure. Adding insult to injury, American subsidiary Envoy Air recently dealt with a data breach incident, putting a dent in customer trust. The bottom line for investors and flyers is that American Airlines is cutting costs and shedding managers to stabilize itself while fighting massive systemic problems like the government shutdown that are totally out of its control. If you want to stay ahead of the game and get the brutal truth about what's happening with your money, make sure you hit the like button, subscribe to the channel, and ring that bell so you never miss an update. I'll see you next time.